on Mexc exchange. Today happens to be the third day of our 30 days team mentorship program, back to back. And the first day, we were able to discuss how to register and deposit on Mexc exchange. The second day, we looked into further how to place a trade on MetaTrader 4 on the Forex side. Today, we are going to be looking into how to place a trade on the crypto side, that is the futures exchange or the futures trading side on Mexc exchange. So the topic is how to place a trade on futures trading using Mexc exchange. So before I go ahead, I want to invite those of you watching this video on YouTube right now to click the subscribe button, and you find the drop-down box where you see a lot of disclaimers and some writings asking you to join the community, where you can get frequent updates of what we are doing, helping people to understand and navigate their way in the financial markets through our experience. Those of you on the Zoom, I would like to be sure that you can hear me loud and clear. If there's anybody on the Zoom who is hearing me, please can you open up your mic and just say something. Let's know that you are there. And you can see my screen.
We can hear you. I can hear you.
Good
All
evening,
right.
Ochima.
That sounds
Like
some people. Oh, wow. Fantastic. Fantastic. I'm happy. I'm happy. Yesterday, we were on a trade ACT USDT futures. This is what I'm looking for. Yesterday, we were on this trade, and we opened it up from 4 hours time frame. As at yesterday, we were only seeing this candle, this particular candle yesterday. So the whole of today, 1, 2, 3, 4, 5, 6.
We can't see your screen, sir.
Okay, let me share my screen again. Thank you. Yesterday, we opened up a trade on ACT USDT. And as of yesterday, when we check on 4 hours time frame, as of yesterday, we saw only this candle. This particular candle here, yesterday. So today, we had this candle, red, 1, 2, 3, 4, 5. This is a 6th candle happening. Each one of these candles, 1, 2, 3, 4, 5, took 4 hours before they were completed. Then the next candle started. 4 hours, then the next candle. From where we stopped yesterday to where we are right now, there have been 5 different candles of 4 hours each that have played out. Despite all that they did in the markets, they could not go lower to where our stop loss is. Our position is still here at $0.5 negative, which is 16% drawdown, telling us that our deposit is still very intact, even though we are in a drawdown of about $1 point something thereabout. looking at what we have here, equivalent to 2.7. No, that is the price. This is the expected draw. This is the drawdown, 0.44 USD. So we are in good shape, even though we are in a drawdown from yesterday. It's very important to note that. So today, we want to place a trade. How do we go ahead to place a trade? The first thing we must do is to go to the left-hand side where we have the assets. Anytime I talk about the left-hand side, I'm referring to this session here. When you open the chart, the left-hand side is where you see the assets, tradable assets. There is a list of assets that lines up 1, 2, 3, 4, 5, 6, 7, 8 continuously like this. We are going to start looking at the 4 major assets: Bitcoin 0.28 positive, Ethereum 0.28 positive, Ripple 0.18 positive, Solana 0.70 negative. It's showing that the 4 major assets, or 5, are beginning to move in the green direction, upward. This is called sentimental judgment or analysis. So we are going to scroll down to look for a cheaper asset like Doge. I really do not like it. So I go down like WIF. I see one there. WIF. I see one there. WIF 0.36. And the price of the asset is 2.5. The current 24 hours change in price is positive for WIF USDT. So that reason, I'm going to pick this asset. So if you want to place a trade in futures, what you need to do first is to pick the right asset that suits your account balance. Why did I select that particular asset that is 0.3% change in price positive and around $2 current price in what? I choose that asset because my capital available is small, $8.8 available to trade. Already I've engaged $2 in the market with that initial trade I took. And I'm in a drawdown of 0.44% thereabout, which is still a good trade. So when I pick this asset that is suitable for my account balance, the next thing I will do is to check 4 hours time frame, always 4 hours time frame. I want to mark the highest point and the lowest point in that market. From yesterday, we marked here as the highest point. We usually call it swing high professionally. And we marked yesterday this part as the lowest part. We usually call it swing low. So when we have marked the swing high and the swing low, or let me put it in another word, when we have marked the most recent high and the most recent low in the market, what we now say is that we have identified the trading range. Some other traders say we have marked our area of interest, but the correct word is trading range. So the trading range have been marked on 4 hours time frame to be from this swing high 4.01 down to this swing low 2.561. That is our trading range. It has been identified. It simply means that if this price drops down below trading range, if the price drops down below trading range, excuse me, I'm looking for something, my course, I want to write. How comes I don't have these tools anymore? No problem. If this price breaks below like it did just now, In fact, I'm even seeing what I'm about to say. If it breaks below like it did just now, pulls back like it has done, show us a bearish engulfing, we should get out of the markets. That's if we are in the markets. That is a sign that the price have broken below our previous marked area of support. That is what it means. So, but because we are not in this trade, so we are not thinking of we should exit because we have not even entered in the first place. So what is the condition that we need to see before we enter this particular trade? The condition we need to see before we enter this trade is any candle, most likely this particular candle that is moving, for this candle to go up and close above this red candle. If we see that happens, we will take the next trade. Let me show you what I mean on trading view. WIF USDT. Let me copy it. Copy. Let me go to trading view. Today, I was in a hurry. When I opened the trading view, I didn't explain so much about it. Today, I'm no longer in a hurry. I'm starting very early so I can talk about trading view right here. Trading view is a website where forex traders and crypto traders and all traders of all kinds, they come to look at what the market is doing in different brokerage, different tables, different servers, different order books, different order flow. Everybody reports their numbers on TradingView. So traders who want to see clearly what the market is doing, they do not limit themselves to the charts available on their broker or the charts available on their exchange. They want to always come to the TradingView to see what is happening from the side of TradingView. So how do you get access to TradingView? It's just a website, tradingview.com. You register on the website for free. Even though TradingView have paid version and subscribe version, but the free version is what I'm using. It's enough for everybody to do their analysis. We don't trade on this platform. We only use it for any kind of analysis you want to analyze. TradingView can do that. So you just go to the website and open it up and look for the asset and open up the asset and begin to analyze. On a particular day, we will pick up TradingView as a topic and deal with TradingView. Maybe before the ending of this week or next, depending on people who are coming back to me with questions telling me I cannot access TradingView, I don't know how to do TradingView, then I will treat it as a topic. Remember, I told you this is your class. You paid for this class. So you have the right to ask questions. You have the right to tell me what you don't understand. I can pick up that thing you don't understand and treat it as a full topic so you can understand it. But for now, I will assume you understand it, and I will proceed to focus on my area of concentration, how to place a trade on Mexc exchange. So we are still talking about the analysis on TradingView. We want to see the analysis on TradingView before we go ahead to decide the trade we are placing on Mexc. It's important for us to see on TradingView because that's what professionals do. So I'm going to check now. This left-hand side is where we see all the assets on TradingView. On almost all the platforms, they put the assets on the left-hand side. When I click on it, I'm seeing ACT. I don't want it. I highlight it. I'm going to change it to WFI USDT. And all the various platforms that have this asset, Mexc have it, Mexc have it, Binance have it, Phoenix have it, Bybit has it, Mexc have it, Binance have it, Bybit. So everybody that have this asset, OKX have it. They'll appear here. We want to see it according to Mexc, not the spot version of it. We want to see the futures. Oh my goodness. What we are seeing here is the spot, WFI spot. Let me see. This is it. This one? Yeah, this one. WFI USDT spot. The full name is Dog Wi-Fi Hat. It's a Solana asset, tradable with the USDT. So this is the H4 view of WFI USDT. So from the H4 view, from yesterday, what would have done yesterday was to pick the high and mark it 4.014. Then we pick the low and mark it. The low is 2.576. That thing I'm saying is currently happening. I'm saying that we want a situation whereby this green candle can go up and close above the red candle like this. We want the green candle to go up and close above the red candle like this. I'm sure you guys can see what I'm trying to draw. If the green candle can close above the red candle like this, we now have what is called bullish engulfing. If we have bullish engulfing, the next candle is going to be our entry, and we are going to take it up all the way. Like this, we are going to use this guy. On TradingView, the name of this guy again is what? Let's see. Long position. So we are going to use a long position. We enter the trade after the candle close. The next 4 hours candle is our entry. We enter that trade. Our stop loss is anything that goes below here is our stop loss. Our take profits is the next high available. There is a high available here. Is our first take profit. There is the second one here. Is our second take profit. So this is the first take profit, 3.2. Then if the price continues to go up, our second take profit target will be this, 3.9. If it doesn't work out, our stop loss is right here, $2. Highest we'll lose there is $2. Highest. On rare occasion, on normal occasion, we are going to be losing something like $1 point something or something like $0 point something. Using and following the risk management I showed you yesterday, which I'm still going to show you again today. If you use a lower risk on this asset, you are only going to lose maximum $2. What is lower risk? What I showed you yesterday and what I'm still going to show you again today. But if this trade goes well, this is 1:8 trade from here to here. You are going to make 2 times 8, $14. So that is why we say the reward, if this trade plays out, is better than the risk if this trade doesn't play out. This is what we call a good risk to reward ratio if this trade plays out. So, but for me, instead of taking this trade, I have to wait to see the trade give me a nice reason to enter or a nice signal to enter. Yesterday, I told you that when we're talking about signal, we may not always look out for bullish engulfing. For example, this is a bullish engulfing right here. This is a bullish engulfing right here, if you look carefully. And if you follow what I'm saying about bullish engulfing being a signal, you will conclude before all these candles happen that this place here is a low. This is our support in question. This is the bullish engulfing signal. Then you enter a buy from here and the market did not go to your destination. It rather brings you down. Then you need also another signal apart from the bullish engulfing. It is called the morning star. The morning star looks like this. It's a 3-candle pattern. You need to see this, what I mean by low, at a support area. What's a support area? Where we are right now is a support area. Where I'm marking right now, this 3 morning candle is a support area. The support area because if you look to your left, if you look at this morning candle, morning star candle to your left-hand side, you will notice that there is a support where markets rise from. There is a rejection where market did not close below. Therefore, if a morning candle appear at the same level of that occurrence, is a good sign for us to take buy. After the 1, 2, 3 candle, the next thing we take a buy, and we're supposed to go all the way up. This is signal number 1. It didn't work. This is signal number 2. It didn't still work. We have been brought down here. The last signal is when the price come back in again. There is a reason why the market do not pick up from here. There is a technical reason why the market did not pick up from here. That is why we are waiting here to see. That technical reason is called sweep of liquidity. When the market or the price or the market maker observe that there are so many traders who are in this price and the amount of buyers are still not enough for the major buyers to come in. Instead of the buyers to come in to move the price up, they'll rather put some small money to sell off, to take off all these traders who bought stop loss, hits them out. And if this signal prints up in the market and the amount of people who are buying are not still enough, what I mean by enough, the people who have large money in this market, they need to enter a buy before this market can move up. If those people notice that the amount of buyers are not enough, there's something called order flow, order book that shows all the total amount of buy in WIF. If that total amount of buy is not enough for the market makers, they will still sponsor the price to go down. So the process of them sponsoring the price to go down again is called SSL, sell side liquidity. They are going to still take up more liquidity to the downside. And when they do that, there's something we call balanced price range, BPR. That thing is supposed to occur. If we see that BPR, is a sign that the market makers are ready to push this price to the upside. Because no matter what you want to do, this price must go to the upside. It's bull run, ladies and gentlemen. The price must go. And for you to really know, as a long-term trader, as you come to the weekly charts, to really see and know if truly the price is meant to go higher. And from the weekly time frame, you can see clearly that there is a bullish push to the upside with a balanced price range. There's a little pullback with a bullish push, break of momentum to the upside with a little pullback, which is a good pullback, of course, that is also coming to balance this other block at this zone, telling you that all these places where we are is a potential place where the market's supposed to rise from this side to go to the upside here. And even this upside is even the least place the market can go to. It can go to all-time high here and even far above to this other side, which is the bull run. So what we are doing now in terms of sentimental or roadside traders is we are saying we are buying the dip. So when you hear traders say we are buying the dip, this is what we are doing as far as the the long-term time frame is concerned, the weekly time frame. Buying the dip in terms of weekly chart, this is a support level, this is a support level, this is a support level, this is a support level. So we say the trend is your friend till the end. We are buying in line with the trend. When we hold a buy there, we hold it as long as 1 week, as long as 5 days, as long as 3 days. We are still holding it. From here up, it went up, it came down to here, it went up, it came down, it hits the support, is called trend line. It went up, it came back again, it hit the support this way like this. Because each time it hit the support here, it hit the support, what happened? It goes higher, above the previous side it went before. That was what it did. It came down again, it hit the support, it went higher above the previous high it went before. What happened again after it went higher? It came down again, hit the support level. This time around, it's going to go higher than this particular price. We're expecting to go higher than this particular price. So if you look at the weekly time frame, you will see that we are still in line of the trend. So if we find a good buy entry, it's a very sweet one, and we get 1:8. If we don't find a good buy entry and the price breaks below and broke below this weekly and close as a red candle, we have to close the trade, because anything that will bring this candle to close below this trade, this trend line, is likely to bring this price down to this level here. And you don't want to be in a sell trade when that is happening. You want to exit the trade with a small loss. So if you bring it down to daily time frame, you bring it down to 4 hours, you will now get to understand all that I've said if you are looking at it from the 4 hours perspective. So many lines here now, difficult to explain. This is why I say we stick to the normal thing we understand, the normal small, straight to the point explanation that I did, which is very okay for all the people who are newbies in this community. So forget about everything that I've said so far. If you don't understand it, I don't want to force you to understand all that I've said so far. All I want you to know is that I marked the highest level of the 4 hours charts, most recent highest level for the 4 hours chart, which is this one. I also marked the most recent lowest level, which was this one. Then I also checked the price. You know, I need to buy in the OTE area. What is the OTE area? I said yesterday, the OTE area is when you mark this place as the away you want to buy. This is away, and you mark this place as the home you want to buy. Remember, you don't shoot from here. You allow the price to move the asset at least upwards. Anywhere from here is where you begin to shoot. It's the safest area. We call it OTE. You want the price to begin to move before you buy. So we call it OTE. It's not from this line. It's dangerous to buy from this line. You are not sure whether it's going to go. It's dangerous to buy from behind. It's not even, according to football, it's not even permitted. So if this is really a football field, then this will be the middle. The middle line is called the 50% Fibonacci. Forget about the name. Just understand the game. The safest place to buy is when this price begins to move. Green candle, anywhere from here. Of course, after this green candle, we are good to go. We can enter a buy. When the price moves up, we can still load more buys. We are going all the way up and down. We don't care. We'll hold it until we get to the middle. From the middle, some people will take profit. That's the first resistance area. If it goes break and pull back and continue, we'll still be in that trade. It will be going upward like that until we get to the final bus stop, they take profits. So we can do all of this movement from here to here. And if it goes here and it breaks above, comes back, give us another bullish engulfing, we can still enter on the way up because we are going all the way up 1:8. So all of these things that I've said them to emphasize that the best place to buy is when our price is back into the range. What is the range? The lowest part and the highest part forms the range of our price. I want to be sure that people can hear me, that I'm not talking to myself, because I've been talking for some minutes now. I didn't hear anybody breathing, anybody saying anything. Please, if you can hear me, please just say something so I can know.
How did you set stop loss? How did you set stop loss?
I hear you.
Yeah, we are.
No, we are not talking about
understanding
stop loss.
it.
We're talking about how to enter a trade. And in how
Can
to
hear you
enter a
loud and
trade,
clear, sir.
in how to enter a trade, I'm talking about ensure that the trade is in the OTE area. So, and that's all I've been talking about. Before we enter a trade, ensure that that trade is at the OTE area. Right now, where we are in this trade is not an OTE area. And there is no signal to enter bullish engulfing. So entering this trade right now is a good idea, but it's risky. It's more safer if we are at OTE. It's more safer when we have the signal at OTE. So this is where you hear traders say, learn how to sit on your hands. At this situation right now, you don't do anything on that asset. even though that asset is the best asset to trade, even though everything looks like less trade. In fact, here on the Mexc exchange, it looks like we are already missing out. Why are we not in this trade? That is the impatience that make traders to lose their account. So if I go now away from here and I go to, let's say, look for another pair, of course, that's the next thing we need to do because there are so many other pairs we can still jump into. Maybe I should consider Dodge because of what I'm seeing right now on Dodge. I'm seeing something interesting on Dodge. I'm seeing Dodge at OTE. So maybe I should consider Dodge. Dodge H4 at OTE. Let's go and check. Dodge H4 at OTE. Dodge H4 from Mexc. I take it to TradingView. Then I go to the left-hand side on TradingView. I paste Dodge right there on TradingView. And Dodge is coming up on TradingView. Dodge has so many exchanges that have Dodge available. So many of them. Majority is Mexc and mostly Mexc Sports. Mexc Sports. So it doesn't matter. I'll just open Dodge anyway, anyhow. So I have Dodge open on Mexc Sports, on Mexc Exchange, TradingView. And the recent high on Dodge is this particular one. I mark it. The most recent low on Dodge is this particular one. And when we put the Fibonacci, forgive me, I want to draw Fibonacci this time around, from high to low. We are seeing the price right now at OTE. OTE will be the 786. 786. So permit me, I'm talking to professional right here, right now. I'm going right now to see if I can adjust my Fibonacci. I want to add 786. 786. No, not 786. That will be 32. 32. No, that will be 23. 23 Fibonacci. Let me see. 23 Fibonacci. Let me see. 26. I'm seeing 2.6. No. 0.3. This one. No. 0.3. 0.2. 0.23. Yeah, this is the one I'm looking for. Good. That's the OT area. So in Fibonacci calculation, this is the OTE area. When price comes to around this area is our OTE. When price comes to 50% is our middle line. So our OTE area is all of this place. All of this place, OTE area. Support level. Non-professionals, forget about Fibonacci. You don't need it. All you need to know is swing low, swing high. Then you can use your eye, like in Kechino's middle line. Home, away. The idea is that this guy came from down, from up to down. On his way going back up, he couldn't. He's now trying to gather energy to go up. Right now, this is where it is. It's supposed to go up because that is where we are going. If it doesn't go up, if it goes down, we'll allow it to go down. If it hits here, it can bounce off and come back again. Sometimes it can go down outside like this, come back again, bounce off again. When it does like this, we can enter from here, then we go all the way here. Right? So all of this place here, any situation that happens here is a good place for us to enter. We call this area OTE, optimal trade entry. Right now, the price is at that same area, OTE. OTE is in between half and the bottom. OTE is in between half and the bottom. So take note, we want our price to be around OTE here before we take our trade. When price is around OTE, we are looking for two things. We are looking for a bullish engulfing or a morning star candle. What is a morning star candle? Look at it. 1, 2, 3. A 3-candle pattern by which the green candle is taller. That is a morning star candle. A 3-candle pattern by which the green candle is taller. This is a morning star candle. 1, 2, 3. You see this green candle? It's even though it's not too tall, but at least the three of them put together. Red candle, green candle, green candle. So this is also morning star. Let me go back again and show you morning star. We need to see a bullish engulfing or a morning star to give us our signal for us to buy. So many times in the market as a trader, you have to learn how to sit on your hands. This is a morning, no, this is not a morning star. This is not also a morning star. No, it's not a morning. This is a morning star, but not a good one. This is not a morning star, it's an engulfing. This is not a morning star. This is not a morning star. This is a morning star. I've seen a lot of them here. This is a morning. There was no engulfing, but there was a morning star. So you need to watch out and be smart. You may not always see engulfing, but you may see a morning star. That's your signal. When you don't see your signal, please hesitate. Do not just take a trade until you see your signal. This is a morning star candle. 3 candle pattern. Red, green, green. You see this one? A push. This one push a little bit, but this one push more. So what actually happened is that we have a red. We expected a green to go up to give us a bullish engulfing. But the green did not go up. The third green was the one that now started moving up. The 3 of them put together, we call it morning star. So it's just like saying that this one gave us the engulfing, but the third one gave us a push and sign of engulfing. So that is called a morning star. Here in this case, we don't have a morning star, but we have a bullish engulfing. 1, 2, 3 candle is no more morning star, but you look at 1 and 2. That means the red candle and the green candle. Look at the red candle. Look at the green candle. You can see that the green candle is higher than the red candle. So the 2 of them is engulfing. So after the engulfing, we buy. It's a signal. After the 3 candle pattern, we buy. It's a signal. So we are looking for either engulfing candle or 3 candle pattern. That forms our signal to buy. Here is a typology of engulfing candle. It did not close above the high, but at least it's stronger than the red. So after this candle, we jump into the next trade and we go. So most times you may not see in exact what you are looking for. It can show you a little bit closer to what you are looking for. Then you can still go ahead and take that trade. But when you see exactly what you are looking for, you don't have to hesitate. You have to pull the trigger without looking back. So that's what we are waiting for on H4 time frame on Doge to take this trade. Some traders, because of impatience, they say, Mr. James, we cannot wait and be allowing this market going up and down. We can go down to the lower time frame H1 to take the trade. Those traders, I don't blame them. They don't wait for the liquidity. They don't wait for the volume to come in. They don't wait for the market money to load up. They just want to trade because their hands scratch them. They want to enter the trade. So those traders, they are called day traders. They want to always pick the position and enter. They don't want to wait. So they come down to lower time frame. In fact, some of them even go lower to 15 minutes and 30 minutes to look for the signal. It's not a problem. If you go down there, you are just a day trader. It doesn't mean you will not make money, but just that you're entering too fast and anything can happen to you. So what they're actually looking for now is a morning star candle. And even in H1 time frame, there is no morning star candle. There is no engulfing candle. Rather, we are seeing a bearish engulfing, which is not a good sign. So if we see a bearish engulfing, we need to see price close above bearish engulfing to render it invalid. To render this bearish move invalid. Because this is a drop to the downside, this is a push to the upside, this is an engulfing facing downward. So telling us that this is an engulfing, this is a pullback, then it's a continuation to the downside. So, but if we have the green candle close above the engulfing, if we have the green candle close above the engulfing on H1, and we have a pullback, then we have another engulfing again on H1, then this is the right time for us to buy Doge. So we go and pick up the long position and drop it above here. If we are going to enter based on one hour time frame, we need to enter when we see this happen, and our stop loss will be around here. But for the sake of 4 hours, we even need to give it enough breathing space. If we enter from 1 hour, we are not going to exit and chicken out from this trade. We are going to pull it down to here. Then we are going to allow our trade to go up all the way to this place. So we are not just going to scalp it. But before we enter this position, we need to come to 1 hour time frame. We need to see the price move above this bearish engulfing. This bearish engulfing is our problem. We are not sure if price wants to go up until price overcome this bearish engulfing we are seeing here. If price goes and close above, pull back, forms a bullish engulfing, then we are good to go H1 time frame. And that also implies that there is something here we are watching out for on H1, which is like an order block. This particular guy is telling us it's responsible for this damage, this pullback, and this continuation. So if price can go above and work on this order block and show us something nice here, we have even a W pattern here with a reversal sign. If you look at it carefully, those of you that know patterns, you will know, you agree with me that we have something like a W pattern right there forming up. This is a move to the downside, one leg, and a move to the other side, a move internal W pattern, which is a sign of reversal. And if we have a push to the upside, that's break above the neckline, and a pullback, and then we are good to go. We are going all the way to take profit here. One, a pullback, break above, pullback. We are going all the way to take profit. Two. So we go all the way up above like that. So we are patient to wait to see this pattern form. So if we are entering by H1 time frame, I show you what we are looking for. We need a break above that particular high that was created there. So you see, it's not an easy thing, right, to look for this signal or to wait for the signal. A lot of time spent in the market is spent waiting and looking at your charts and doing nothing. Majority of the time we spend while trading, we spend it doing nothing, just looking at the charts and waiting to see a reason to enter. We don't just enter because it's time to buy. We need to see a reason why we are entering. Once we enter, we are not going to exit, we are not going to chicken out. We are going to hold this position until this position goes down to SL. SL should be anything closing below this area with a bearish engulfing break, pullback, bearish engulfing, then we close. If we don't see that, we are going to hold the position in drawdown. And if we don't see a sign to enter from H1, we're not going to enter. We're going to rather wait for H4. For H4 to complete and H4 to show us bullish engulfing, then we enter the next candle. So it's either you enter on H4 after bullish engulfing, or you wait for H1, break above that high, pull back, then you enter. Which one will you wait for? We don't know. Let's see. While we are waiting, we still have the opportunity to check for another asset. Until we find an asset that gives us a clear signal to buy, ladies and gentlemen, there's no point buying. Yesterday, when I took the ACT trade, we entered without seeing that signal. No wonder we are still in drawdown. So you see a reason why so many people enter a trade without seeing the signal, and they are wondering, why am I not in profit? It's because you have not seen every reason why you have to enter. There is no reason why that price should move. So the longer we stay here looking for different assets, the faster or the easier we find a trade to pick. So we're going to keep checking. Here we are seeing 1.29. This is not bad. Link USDT. I like this asset a lot. It gave me profit the last time. So let me see if we have a good setup on Link USDT. H4, clearly without missing word, clearly without thinking twice, we are not in a very good condition right now to trade this asset. Why am I saying that? All of you look at it and you agree with me that this is the high. The latest high printed in 4 hours time frame, 4 hours. The latest high printed, the market is close to that high. So we can't be buying. So the only thing we can be doing here is selling. And right now, as I speak to you guys, I will not be a fan of any seller on the crypto markets. People like Blessing Aguasha, they say, we'll do what the market is saying. Well, the market is telling me that we're in a bull run. So if you want to sell because the market is facing downward, so be it. That's you. You are selling against the tide of the market. You are going to make profits, of course. It's like swimming against the tide of the river. You need to be a good swimmer. Of course, you survive. But if we are leading people who are not very good swimmers, we cannot teach them to go against the tide of the river. The general tide of all the crypto market is bull. So why would I be looking for a sell opportunity? Right now, what I'm seeing here is a sell opportunity. The market is facing downward. It moves from down, it went up. If it went up, the next direction is to come down. Right now, the price has even broken a structure from here. This particular structure has been broken, telling me that we are nose down. We are not anything going up. We are nose down. And if you look carefully here, there are signs of morning star candle after the break below, pushback, morning star candle, a little push up, then something like a bearish engulfing until we have the price close above a pullback before we go up again. And that is not a very good trade to take because the price movement, the last support is here. Except if you tell me that you want the scalp and use this place as your reference, that's your trading reference, that's this support as your reference, which is not ideal because that is where the market is. You're supposed to use the previous support, which would have been this one. And if you are using the previous support, which is this one, it means your trading range is here. And this is not still a bad idea, but it's too tight. And in that case, you need a signal to enter because we're at OTE right now. We are at OTE. There's a rejection right here of this support level. So price goes back at OTE. So it's a good position, but the stop loss is tight. So let me go to link USDT on TradingView and see if we can find an entry. It's most likely that we could find an entry, a scalping entry to the upside. So I go to TradingView back. So I change the asset to link USDT. So many exchanges have this asset. It's a popular asset. Even KuCoin has it. But I want to open it on Mexc because this is not link. I want to open it on Mexc. This is link. Correct. Open it. Link. We are here on link. You see, it's the same thing, right? We are on link USDT on Mexc. And from our analysis, we selected this place as the highest point of the market. We mark it. From our analysis, we selected this place and we said, no, this is where the market is. So we will not use this place. This is too recent. So we'll go to the previous. We'll use the previous. And if we are using the previous, it tells us that the price has come from up to down and kissed this place. This kissing is called a rejection. And remember, I gave it a name the other time. If you can remember SSL, it's called sell side liquidity. When the price sweep the low and push back up. When that happens, it's a very nice sign that we are going up. It's actually a nice sign, but we need to see a signal. If you look carefully, you will see a bullish engulfing. 1, 2, bullish engulfing. After a bullish engulfing, we are good to go. Buy. Ladies and gentlemen, I don't know what you have to say, but I've seen my signal. I'm buying these assets. I'm buying this asset. There's a clear bullish engulfing on H4. Look at it. 1, 2, bullish engulfing. So what else do I need? I'm pulling the trigger. I'm seeing a reason to buy Link USDT right now, which is a bullish engulfing. I'm also seeing after the bullish engulfing a very nice rejection. Then I'm seeing the push already started. So I'm buying Link USDT. Right now, I'm buying Link USDT. I don't know about you. I'm buying it. And when I buy it, my stop loss is anything that close below this guy, SL. Around this price, 2600, 26.00. My take profit is anywhere around this area here, 31.00. And around 1:8, thereabout. Let's go and see what we have. Let's bring the long position. Long position, where are you? Long position, click on it and bring it here. We are buying this asset right now. We're not even thinking about it. We are taking it all the way to this point and we are stopping anywhere below this guy because that's where it's now invalid. And what risk to reward ratio we have here? We had risk reward ratio 2. So our entry is right now market order. If you are writing signal, buy Link USDT entry market order stop loss this one 25.96. I have 7 minutes to go. Take profits 30.95. I'm done. So I'll take a picture, copy, go to the WhatsApp, post it to the Signal group. Be a blessing to the people. Let's dash it to 7-figure boss signal group. Live. Trade call. We're done. We come back here. We go to the Mexc. Link. Isolated. This account balance is 428, so I can use 10x. Confirm. Quantity, I can go 25. Good. Stop loss 25.96. Click on short stop loss 25.96. Take profits 30.00. Let me confirm it. Take profit 30.95. So go back. Long take profits. Oh, this is another one. There are two accounts. 30.95. 25.96. Order, everything is intact. Now, please take notes. All these things must be imputed, starting from isolated margin, 10x, market order, quantity, stop loss, and take profits. Long, take profits, SL. Okay, we are doing short. Okay, we are doing long. Sorry here. I did the wrong thing before I tap on short. We are going long. So long is 30.95. We are going long. So we are going to make 130. We're going to make $143 estimated P&L if we go to take profits. What about stop loss? Our stop loss is 25.95. We are going to lose $73 if this doesn't work. So if I don't like this, I can reduce the risk right here. Somebody asked me yesterday, how can I reduce my risk? How can I know how much I'm risking? It's here. I want to risk $20 for this trade. That means my quantity has been dropped down to 7%. Then if I make profits, I'm going to be making $40. If I lose, I'm losing $20. So I can reduce this. You can see the estimated loss, estimated profit when I input the stop loss and take profits. So I will go long to see if they will permit me to take this trade like this. They are permitting me. So I go. I'm risking $20 for this trade. I'm in. My stop loss is right here. My take profit is right here. If it works, I'm going to make $40. If it doesn't work, I'm going to lose $20. That is that. Let me go to the second account. The second account is an account of $8. Unlike the previous account, remember we are on link. So I have to change to link, L-I-N-K. Link perpetual, that's where we are. Yes. Is the one, correct. So we are on link on this small account of available. This is not the one. Let me see. Let me see. Let me see. No. This is not the asset, sorry. Let me try something. I can't see the balance. That's what I'm actually looking for. Okay, I think it's rolling network. Just a moment. We're out of time. We need to leave. We have barely 3 minutes. This final 3 minutes is the most important 3 minutes of this call because I'm actually doing the main execution. But before the execution, you see how far we had to go to look for an asset. You see all what we needed to do before we were able to get an asset. It's quite disturbing here. This thing is not rolling the way I want. And maybe I should execute this thing from my phone, right? Okay, it's back. Do I have my available balance now? Yes, it's here. 8.8 is available for trading. And are we on futures? Yeah, we're on futures, of course, James. That was why you saw the balance. Okay. So if we're on futures, I need to bring up link USDT. Please let them permit me to trade this asset. Link, LINK. There are two of them. One of them is not permitting me to see my balance. I think, let me try the second one. 183K volume. Yeah. This one is picking up. Yeah, it's going to work. Good. The balance is 8.8. My isolated margin is intact. Confirm. Done. My leverage is 5x. Confirm. Done. The market order is there. Then quantity, let me use 23. So you see, we are going long. The take profit is 30. Let me use 90 here. It doesn't matter. We are going to make a profit of 0.8. That's quite small. What if what is the stop loss now? The stop loss is going to be 25.96. What are we going to lose? 0.5. That's quite small. So we need to go and increase this guy quantity. Let me raise this quantity. I want to risk $2. So this is 2.2. This is $2. Here. This is $2. I'm risking $2 right here. I'm going to make a profit of $3 if this trade works out. That's 55%. So I use this quantity to draw and see what I'm risking versus what I'm going to gain. I'm going to risk $2. I'm going to make $3. That's what it means. Based off on this take profit area from here to here. You see, that's not a good risk reward ratio, right? And that's the problem. We want the reward to be far higher than the risk. How can I be risking? Okay, now they're telling me that I'm risking 1.7 and I'm going to make 2.3. Okay, let me just go ahead and take that bet. I'm risking 1.7 and I am going to make a profit of 3.2 if trade works. So I'll execute and see. Yeah, they're telling me yes. Good, I'm in. Ladies and gentlemen, I'm in on this other account. I'm risking $1.7 and I'm targeting to make around 3 point something dollars if this trade works. And I entered this trade because I saw a bullish engulfing on a support level here to the left-hand side. And this trade began to move, so I jumped into that asset. If this trade comes down and close below here, pull back and comes down here, my stop loss is waiting for it. If it doesn't, if it pulls back up and continue doing its thing and gets to our target here, I'm going to end this trade in a profit. Ladies and gentlemen, this is exactly how to take a trade on the Mexc exchange. I'll come back again tomorrow to continue. Right now, the link USDT we took right now is currently moving in profits, and the P&L screenshot is 1.34%. We are taking it all the way to 59%. That is our target. And right now, we have done 1.34% in profit on link USDT. You can take a screenshot of the profit you have made P&L and who are following your education for them to see the good work that you are doing. Ladies and gentlemen, I have come to the end of this class. I'm moving right now to another Zoom call, Axie Broker and other areas of this business. Ladies and gentlemen, very quickly, I just want to, okay, not this. Hold on. I'm trying to post on WhatsApp. My time is up. My time is up. I need to leave. Okay, done. Ladies and gentlemen, I see a lot of people on this Zoom call who are not supposed to be on the call. Please, next time, please do not join this call because you are not supposed to be here. You are supposed to be on the YouTube channel to watch for free. This Zoom call is only for paid members. People like Uba Okibe, people like Tony Jordan, people like Onyi Opara, people like Elijah, people like Ebele, people like Emmanuel Inya. All these are paid members. If I did not mention your name, it means you have not paid. You are not supposed to be on this Zoom call. You should be on the YouTube. The YouTube is a free version of this class, but the Zoom call is a paid version of this class. And for those of you that are on the Zoom call with me, that means you have paid. I'm giving you an assignment. I made you a host. I give you an assignment for you to take a trade on Link USDT and post the trade on the traders channel. Post the analysis of the trade and also post again the trade you have taken on the WhatsApp channel, traders channel. Thank you so much for joining this call. I'm moving over to our next call, the Wave Community call. My time is up. Thank you for yours. If you have question, please drop your question in the traders channel. I will answer your question in the traders channel. Thank you so much. See you tomorrow again, 7 p.m. Make sure you have paid if you are joining the Zoom call. If you have not paid, you can join us for free on YouTube, James Ochima. My time